Larker Corporation uses an activity-based costing system and has 4 activity cost pools, which are listed below. And the company had the following beginning inventory balances, which are listed below, and the selected transactions that are given took place during the year. We need to record the transactions in journal entry form, then post them to T accounts. Let's begin by recording the journal entry for transaction A. Raw materials were purchased on account for $928,000. That means we will debit raw materials for $928,000, and on account means to credit accounts payable for $928,000. Letter B, raw materials were requisitioned for use in production for a total of $931,000. $822,000 were direct materials and $109,000 were indirect materials. The indirect materials are debited or charged to manufacturing overhead, and when the direct materials are issued to work in process, we will debit work in process. And again, we're taking this out of our raw materials inventory, so we'll credit raw materials inventory for the $931,000. In letter C, we're told that labor costs incurred at the factory were $486,000. $396,000 were direct labor, which go directly to work in process, and $72,000 were indirect labor, which get charged to manufacturing overhead. So the $72,000 gets debited to manufacturing overhead, and the direct labor of $396,000 gets debited to work in process, and we'll credit salaries or wages payable for $486,000. Item D, depreciation was recorded on the factory assets of $284,000. This will be recorded as a debit to manufacturing overhead and a credit to accumulated depreciation. Letter E, we're told miscellaneous manufacturing overhead costs were $175,000. This is a debit to manufacturing overhead and a credit to accounts payable. In letter F, we're told that manufacturing overhead cost was applied to production using our actual activity rates during the year. And we're given our actual activity rates that we calculated up above our predetermined overhead rates. Were $24 per machine hour, $85 per order, $175 per setup, and $16 per direct labor hour. Our actual activity levels are given down below. We've got 3,800 machine hours, 700 orders, 400 setups, and 22,000 direct labor hours. So we'll calculate our applied overhead by taking our activity rate and multiplying it by our activity level. So machine-related overhead is $91,200. Our purchase order-related overhead is $59,500. Our machine setup-related overhead that we're going to assign to work in process is $70,000. And finally, our general factory overhead assigned to work in process is $352,000. So our total applied manufacturing overhead is $572,700. When we apply manufacturing overhead, we debit work in process and we credit our manufacturing overhead account. Finally, in letter G, we're told that completed products were transferred to the company's finished goods warehouse. According to the company's costing systems, these products had cost us $1,690,000. We will take the $1,960,000 out of work in process and put it into finished goods. So we'll debit finished goods and we'll credit work in process inventory. The next part of our question asks us to post our journal entries to T accounts. Let's begin by picking up our beginning raw materials, work in process, and finished goods balances. Our beginning raw materials is $18,000, beginning work in process is $24,000, and beginning finished goods is $46,000. Our first journal entry then was a debit to raw materials and a credit to accounts payable. So let's post these items to our T accounts. Let's post journal entry B, which was a debit to manufacturing overhead and work in process and a credit to raw materials. So posting our third set of transactions to our T accounts. Item C, let's post the $72,000 debit to manufacturing overhead and $396 debit to work in process and $486,000 credit to wages payable. We can post our manufacturing overhead and accumulated depreciation in journal entry D. Journal entry E will post our debit to manufacturing overhead of $175,000 and accounts payable of $175,000. Next, letter F will post our debit to work in process of $572,700 and the credit to manufacturing overhead for the same amount. Then finally, we can post our finished goods and work in process journal entry. After we've posted all of our journal entries, we can add up our T accounts. The one we're going to want to pay attention to next is our manufacturing overhead, because we're asked to determine whether we have under or over applied overhead. Since we have a debit balance of $67,300, that means we had under applied overhead. We did not apply enough, which means work in process was too low by $67,000, which means finished goods was too low by $67,000, which ultimately means cost of goods sold was too low by $67,300. So our journal entry to close that out will be a debit to cost of goods sold, which will increase our cost of goods sold, and a credit to manufacturing overhead of $67,300. And this would zero out our manufacturing overhead account.